Yo guys, welcome back to a new video, a new educational video. Today we are going to discuss a follow-up of our previous video about market structure, and today the subject will be internal versus external structures and what they are and why they are different from each other. Some people use internal and external structure. I use those terms. Other people use major and substructure, with internal structure being the substructure and external structure being the major structure. Okay, so let's dive right into it. What is external structure? If you're looking at this chart, let's say the weekly, because it's a bit clearer. Or sorry, no, the 3 days. Let's say the 3-day. If we're looking at this chart and we are going to see what the structure is, we would say that this is a whole uptrend. Yeah, this is an uptrend, and from here it goes into a downtrend. So what the structure is the points which holds the trend. For example, we started our trend here. We created a high, we create a higher low. So this is the new protected low, and protected low is the place, is the swing point which holds the structure. So in a bull structure, this is a low, of course. In a bear structure, it's an high. For example, here, and this low or this high can't be broken. If it gets broken, then we know, okay, it's a change of structure. So this is the protected low. Then we create a new high. This new high, so this is the new target high. Then we make a pullback, we create this new low, the higher low, the protected low. Then we create a new high, so this is the new target high. Then we pull back to here, create a new low, this is the new protected low, and then we top out at 60 cents. Okay, so these are the points I would point out as external structure. And what that means is these are the points that hold or that create the bullish structure from the 3-day time frame, of course. So let's make this a bit clearer. Let's delete all of that and let's use a highlighted tool, and let's just snip these points. So this is a target, this is an important swing, this is an important swing, this, and this. Okay, so this is the external structure. This is the whole structure here rests on these points. So what is the internal structure? Well, if we're going to look at these points, like I said, and we're going to draw lines from them. So let's say from this, and let's make it a bit, yeah, so this point, then we have this point, and as long as this point or this point does not get broken, we will not continue our structure, or we will not break our structure. So in this scenario, we did not break the low. We broke the high at some point, so this will be the new high, like I said, the new target high that holds the structure. This will be the new protected low. So, and we continue like this, then we have the new high, then we get the new protected low, so like this, and we get the new target high. As long as these points do not get broken, so for example we're here and the price moves like this, as long as this does not get broken, so this low, we will not change structure, we will not go in a further downtrend. As long as this point does not get broken, we will not continue our bullish structure, and we will just go sideways. What is the internal structure? Well, that's just everything that happens in between these points. Then of course we make our new high, we pull back, and again from this point to this point, this is all internal structure. again, we go to this high, pullback, all internal structure. So what that means is these structures can be very complicated, can be very large. It depends on the time frame you're looking at, of course. If I'm looking at the 3-day time frame and I'm going down to the 12-hour time frame, you can see that this, let's make the example first. This move here, this impulse looks very small on the 3-day time frame, very short, I mean, so only a few candles. But if I'm going to the 6-hour time frame, you can see this is a very long move with a lot of pullbacks, smaller pullbacks, and then new highs, and then a very strong impulse. But you can also see that this, for example, is a very big downtrend on this time frame. So there's a lot of candles you can trade in this downtrend. So this is all internal structure, and in this internal structure it is a downtrend. Although the external structure, so the thing we were just pointing out at the previously, so here, although this whole structure is bullish, as you can see, so this is a bullish structure and this is the external structure, but this here is a downtrend which you can trade pretty easily actually. And if you go to a low time frame, you see there are enough candles, there is enough structure to see what you can do, and you always have to trade with the structure. And of course, if you're going even low on an even lower time frame, you can also get the internal structure within the internal structure and the external structure within the internal structure, etc., etc., etc. So this you can make it very complicated if you like, but I wouldn't do that if I were you. I would just keep it at a higher time frame, because time frames are hierarchical. The higher the time frame, the more important the time frame, and especially if you're a starting trader, I wouldn't try to use very low time frames, at least not at the beginning, because it can be very overwhelming and can be very confusing as well. So yeah, what I wanted to point out here in this video, I want to show you what is the internal and the external structure. I hope it makes it a bit more clear. So the external structure here is this whole move on a certain time frame, just the basic structure of that time frame. That's the external structure. And within the time frame, you can also zoom in. So go to a lower time frame, to the daily, and then spot other structures. So for example, this here is internal structure. And this is internal structure, and this is internal structure, and this is internal structure. But also this here is a very big uptrend within a bigger uptrend. So this would be very nice to trade actually. But this is the internal structure, and with this is a downtrend within the bigger uptrend, also internal structure. So with this strategy, I mean, it's not really a strategy, it's just basic market structure. But with this structure technique, you can also really sharpen your trades. And with that, I mean, look at lower time frames to get better entries, and look on the higher time frames to look for better targets. For example, your RR can be way bigger if you spot a market structure break around here, for example, the lower time frame on the 1 hour or the 2 hours, and you see it on the higher time frame, that you can take this trade all the way to maybe here or even here. Of course, this is a anomaly, so you can't really rely on that. But let's say to here, then you see that the RR would be way bigger than if you're just looking at that certain lower time frame. So I hope you learned something from that. If you have any questions, just let me know. Just to point out, always look on the time, look at the different time frames. Always check what is the bigger structure, which way are we going, and try to go to lower time frames to make it more detailed and make your plan even better and more accurate. Okay, guys, have a nice evening. Bye bye.